Imagine a country where land prices skyrocket so high that the value of the imperial palace grounds in Tokyo was said to be worth more than all the land in California. Sounds insane, right? Well, this was Japan during the late 1980s, the era of the Japanese asset price bubble. From 1986 to 1991, Japan's economy looked unstoppable. Real estate and stock prices soared, fueled by cheap money, speculation, and government policies that encouraged risk-taking. The bubble was characterized by overheated economic activity, uncontrolled money supply, and reckless credit expansion. Overconfidence pushed investors to believe prices would never fall, a classic recipe for disaster. Banks aggressively lent money, sometimes even offering ordinary workers loans worth 100 million yen if backed by property. Corporations watched their balance sheets balloon, as rising stock and land prices boosted collateral values. The Nikkei stock index skyrocketed, hitting nearly 39,000 points in December 1989, more than double its level just a few years earlier. Tokyo's real estate became so expensive that a small patch of land in the city could be worth more than entire U.S. cities. But in late 1989, the tide turned. The Bank of Japan, worried about inflation and runaway speculation, began raising interest rates. Higher borrowing costs suddenly made speculative bets harder to finance. Investors, realizing prices were overvalued, started pulling out. Confidence cracked. And then came the crash. From its peak of nearly 39,000 in December 1989, the Nikkei stock index collapsed, losing half its value by August 1990. This was one of the sharpest stock market crashes in modern history, wiping out trillions of dollars in wealth. By 1991, the crash had spread to land prices. Real estate values plummeted, leaving banks stuck with mountains of non-performing loans. Although the bubble visibly burst by 1992, the economic pain lingered. Japan entered what became known as the Lost Decade, a period of stagnation and deflation that lasted well beyond the 1990s. It wasn't until 2018 that nationwide land prices in Japan finally recorded a small year-over-year increase of just 0.1%. Several forces combined to create and burst the bubble. The Plaza Accord of 1985 pushed the yen higher, forcing Japan into loose monetary policy. The Bank of Japan slashed interest rates to 2.5%, encouraging speculation. Financial deregulation allowed banks and companies to borrow and invest freely in real estate. And when the BOJ finally tightened policy in 1989, the sudden shift triggered panic selling and a market collapse. The Japanese asset price bubble is a powerful reminder of what happens when cheap credit, speculation, and delayed central bank action collide. Once confidence breaks, even the largest economies can suffer decades of stagnation. From unstoppable growth to one of the worst stock market crashes in history, Japan's bubble was a turning point in global economics. Do you think today's markets, from US stocks to European stocks, show signs of a similar bubble? Let us know in the comments, and don't forget to like, share, and subscribe, the fellow investors.